To the Vetiva breakfast meeting brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. Today, along with our usual rundown of the equity and fixed income markets and our Frontier Africa Reports, we'll be hearing from Luke Ofojebe, our team lead of equity research, on our 2022 outlook for MTN Nigeria. Before we hear from our speakers, I'd like to remind everyone that this meeting is being recorded and may be shared with third parties, as well as being broadcast live on Facebook. The presentation will hold for 30 minutes, inclusive of Q&A. However, if due to time constraints to answer all of your questions, kindly forward them to research@vetiva.com and we'll get back to you. So we'll start with our equity trader, Seun Otomo. Good morning, Seun.
Good morning, Joshua, and good morning, everyone. We start off with the performance of the equities market in Ghana. As the benchmark index in that market started the week on a positive note with a 42 basis point upward close, just like we had mentioned yesterday. Positive close was largely supported by gains in Cowbank and MTN Ghana, as Unilever Ghana continued on its negative run with a 989 basis point loss in the session. Trading activity improved in the session, and yesterday's gain pushed the market to a year-to-date close of positive 19.05%. In the BRVM, the composite index, just like in Ghana, ended the session in the green with a 26 bips close, which was largely supported by price appreciation in Solibra and SMB Cote d'Ivoire, gaining over 7% each. We saw a positive market breadth with 12 gainers and 9 losers in that session. Year-to-date loss in the market continued to decline with the recent consistent gains seen in the market. The year-to-date moderated to just negative 46 bips in the BRVM. Moving quickly to Nigeria, the ASI, just like in the other market reviewed, ended the session in the green, rising 12 bips. Market was largely positive with gains in Zenith Bank, GT Bank, UACN, MTN, amongst others, all supporting a green close, as 132 and 430 bips losses in Access Bank and Total, amongst others, couldn't pull the market down. Then investors continue to react positively to the news of the corporate action in UACN following the declaration of about 1 naira 20 kobo dividend, which comprises of ordinary and special dividends. For activity level, we saw a 1,216% increase in market turnover to 32.1 billion naira in the session, and this was largely due to a major cross of over 181 million units of MTN shares worth 29.7 billion naira. We gathered this is a local cross, and it was done by one of the major shareholders in the telecoms in the company. The unit cross represent about 0.64% of the outstanding shares of the telecoms giant. For sectoral performance in the session, we saw it was generally positive, with all subsectors closing higher, which was led by the insurance and the banking sector. So for our expectation for today, we'll be asked for outside of large crosses that we saw in yesterday's session, market was largely quiet with few trades going through. We expect this pattern to continue in today's session, and we also foresee a mixed tilt. We feel as some of the stocks, as some of the companies are declared dividends as the qualification date gets nearer. Most of these investors will continue to react to pitch their tent with these names, thereby giving some leading to some price appreciation, while a few stocks will continue to remain beaten down. So we expect this mixed tilt to the session. Thank you very much. That will be all for the equities market.
Thank you, Sean. Next, we'll move on to Omorege, our fixed income trader. Good morning, Omorege.
Good morning, Joshua. Good morning, everybody. I'll quickly give a recap of fixed income market activities for yesterday. So I'll start with the money market. Coming from the 69 billion positive that was recorded on Friday, we saw a marginal drop in system opening figures yesterday as money market opened 44.2 billion long with coupon inflows of about 32.7 billion, improving system liquidity to 77 billion positive. We saw interbank market rates drop to trade between 11% to 13% from the 25% levels that were recorded on Friday. The drop in interbank market rates was largely due to the lack of any major funding need yesterday. We expect the market to trade at lower levels today on the back of OMO credit of 20 billion into the system. I'll move on to the FS market. The parallel market remains stable to trade at 482 naira to $1 yesterday, while the earning window traded at a high of 437.62 naira to $1, closing at 410.33 naira to $1. The earning industry turnover increased slightly to $69.71 million yesterday, coming from $61.52 million recorded on Friday. Our outlook for the naira remains we continue to hover around these levels in the absence of any significant supply of dollars into the system. Moving on to the treasury-based market, the T-bills market opened to intense activity yesterday with demand seen on the mid-tenor papers as well as the long-tenor papers. There was really no significant offer on the mid-end of the NTB spectrum, while the offers on the long end were around 8.6% levels, 10 basis points lower than where they traded last week. We also saw bids on the 1 year between 8.8% to 8.9%. As a result, few trades were consummated across the NTB curve. The reason for the slight moderation in rates was largely due to two things. One, the improved system liquidity on the back of coupon inflows that came into the system yesterday. Two, a lot of players traded cautiously yesterday and were not so eager to exit their positions, given that there is a bond auction today and that should give, there's a bond auction tomorrow and that should give clarity on interest rate direction. In the OMO spectrum, we saw offers around 8.9 levels on the long end, but there were no bids on that end, hence a muted theme played out in that space. Our expectation for today is that the T-bills market will trade actively with OMO maturities of 20 billion likely to spur buy-side interest. I'll conclude with the bonds market. This week resumed on a very quiet note in the bonds market, with wide bid and ask spreads seen across the curve. As the trading session progressed, coupon inflows of about 32.67 billion saw the spread tightened on the mid to long end tenor with few trades consummated, particularly on the 2027 maturity between 12.2 to 12.3 levels. We also saw demand for the 2023 maturity at around 9.8% levels. However, offers in the market were around 9.3%. Consequently, no trade was done on that maturity. The DMO released the bond auction circular yesterday. The circular shows that the DMO plans to borrow 50 billion each on all the maturities on offer. When they released the calendar for the bond for Q2, they had a band of 50 million to 60 million for each of the tenor. So the circular they released yesterday has shown that they plan to borrow the lower band, which is 50 million, across the three maturities on offer. That comes to a total of 450 million on offer. That's what they are offering at the bond auction tomorrow. But what has happened in the previous auctions, that has also shown that the amount on offer does not really guarantee what they eventually borrow, as that is not cast in stone. They have consistently borrowed more than what they had on offer in the previous sessions, and we think that might also play out tomorrow. So our expectation for the bonds market today basically is that it's also going to trade on a quiet note till after the bond auction. So that would be all for fixed income. Thank you very much.
Thank you, Omar. Next, we'll be hearing from Sheikh Mbu on the BRVM Stock Exchange. Good morning, Sheikh.
Hello, good morning. In terms of the BRVM, this 15 weeks of trading has closed in an excellent note with indexes like BRVM Composite that grew by 1.76%, the agriculture industry by 6.44%, and the industries indexes by 4.51%. Because the BRVM has been in the upward trend, it improved its performance in the sense that the BRVM Composite was able to catch up to its negative trend since the beginning of the year and now reach minus 72% since the beginning of the year. This week was mainly highlighted with, for the first time, a very strong presence of investors who exchanged over 3.4 billion CFA. And also, this was also highlighted by the impressive results issued by companies like Société Générale Ivory Coast and SMB, the bitumen company, for the 2020 results. This week was mainly dominated by the sellers compared to the buyers. This is mainly due to the higher number of stocks that were in the red compared to the ones growing. In terms of the equity markets, SMB stock skyrocketed by 33.86%, reaching 4,685 CFA per share. This performance was mainly highlighted by the excellent results of the company and expecting a 16,000% growth and a net dividend per share of around 810 CFA, giving shareholders a net return of 17.29% starting from Friday, 16th of 2021. So investors literally rushed for the stock, and this was mainly due to the high performance expected by the company, but this was also driven by the sharp drop of the cost of raw material. The company showed a net profit of 9.4 billion CFA. This sharp drop of cost of raw material of bitumen in this case is mainly driven by the falling price of Brent oil due to the COVID-19 pandemic, and the average price hovered around $40 per barrel between March and December. Also, in terms of excellent performance, you have South Ivory Coast, of which the share price went up by 17.95%. And the stock has been experiencing a downward trend since the beginning of the month of March, but it was able to reach one of its lowest quotation in the month, but now has been showing excellent results in the 2020 due to their different policies which help them improve their stock. In terms of the the sharpest drops, we saw Aura Group, which registered minus 7.07%. This was mainly due to investors selling their shares in the last 3 trading sessions of the week, which represented 98.6% of the weekly volume traded for the stock. The banking group, it published its 2020 results on April 16th and recorded a net profit which fell by 94.1%, justified by 74.2% in its cost and operating cost. Last week was very busy in terms of issuance of net annual results for 2020. The first one was with Bank of Africa, Ivory Coast, which issued its 2020 annual result, which experienced, they showed a net profit decreasing by 1.2% due to a cost of risk increase of 292% and a 7.8% growth in operating expense. Societe Generale Ivory Coast also issued its 2020 activity report. Net income fell by 3.6%, caused by a 96.6% cost of risk, justified by the recording of specimen provision for risks and charges of 6.21 billion allocated to customers operating in sectors that were mainly impacted by the COVID-19. There was a notice for a shareholders meeting for Bank of Africa on April 15th, which planned to distribute a 7 billion gross dividend to shareholders, which means a 315 net dividend per share. And this is expected to be done on May 12th. There is a publication for the annual result of Societe Generale Ivory Coast for a net profit coming down by 70%, a net profit up by 70%, sorry, driven by a 7% growth of in rubber sales and 26% in palm oil sales and a good cost control policy. In terms of SMB, which is the bitumen company that did this excellent performance of 33%. So they issued their 2020 financial statement and their first quarter 2021 activity report and financial statement, showing a growth of, as I said before, a strong growth in net income, which was their all-time best record, due to a 44% drop in raw material purchase costs. And this is mainly due to the Brent. And for the first quarter, their net profit grew by 49% thanks to consolidation of its commercial strategy and optimization of its operational costs. Aura Group also, as I mentioned, issued their 2020 annual results on 16th of April, with showing a net income that dropped by over 50% compared to last year, due to their increase in operational costs. In terms of the bond market, the market closed with the market cap of 6.327 billion compared to last week, which is up by 14 bips. The weekly value traded stood at 7.42 billion, mainly marked by the Mali Treasury bonds for an amount of 4 billion and the Ivory Coast Treasury bonds for an amount of 2.47 billion. In terms of the money markets, there were some need that were the issuers requested in the WAMI region a total amount of 186 billion, 96 billion in treasury bonds and 90 billion in treasury bills. The market offered over 209% coverage rate, but the market only retained 35.2%, a total amount amounting to 136 billion. The issues of 36-month maturity Guinea-Bissau Treasury bond on April was the most popular transaction, with a coverage rate of 118%. In terms of this coming week, we're expected to see some issuance for the Ivory Coast and Senegal, amounting for 80 billion CFA, with different maturities. Ivory Coast in the short term and Senegal for mid and long term. That's it for me in terms of the BRVM.
Thank you, Sheikh. Quickly, because of time, we'll move straight to our team lead equity research on our outlook for MTN. Luke, please go ahead.
Thank you very much, Joshua, and good morning, everyone. So 2 weeks ago, we initiated coverage on MTN Nigeria PLC and valued the company at a 1-year target price of 225 Naira. So that gives a potential upside of 36% relative to current market price. So in terms of company's financial performance, over the last 5 years, we saw revenue rise by a CAGR of 11%, and that was mainly driven by the surge we've been seeing in data revenue. For instance, data revenue grew by 32%, by a compounded annual growth rate of 32% over the last 5 years. And this was mainly driven by increased data demands as well as increasing subscriber base. And more recently in 2020, data revenue jumped by 52% year on year. This was mainly driven by increased data demand during the year as a result of remote working during the lockdowns that were imposed by the government last year. In 2021, we still expect to see strong growth in data revenue, although not as strong as what we saw last year. Going by our expectations, we expect to see a 28% growth in data revenue. And over the next 4 years, we expect growth to moderate to around 25%. Then on the flip side, we've been seeing slowing growth in voice revenue. This was mainly due to a couple of factors over the last 5 years, mainly due to intense price competition between the players in the industry, as well as an increasing preference for over-the-top services like making calls via WhatsApp, Skype, and a couple of other internet-driven platforms. This year, however, we expect voice revenue to increase by 9% year on year. This is due to the fact that Q2 last year was a very low base, as we saw a significant dip in voice revenue. So on that basis, we expect to see voice revenue rise by 9% year on year in 2021. However, over the next 4 years, we expect growth in voice revenue to slow down to an average of about 5%. Further down the income statement, we've been seeing inflationary pressures impact operating costs over the last 5 years. And just recently in 2020, we saw our operating costs rose by 18% year on year, mainly a reflection of the currency devaluations we saw last year. This year, because we expect that inflationary pressures will persist, we expect operating costs to increase by 14% year on year. And on that basis, we expect EBITDA margin to drop from 53% last year to 51% this year. Over the next 4 years, we expect EBITDA margin to remain around 50% levels. Given the fact that we expect to see an increase in the company's borrowings for network expansion purposes this year, we expect to see interest expense rise from 144 billion last year to around 170 billion in 2021. So that brings our PAT expectation to 231 billion, indicating a 14% increase year on year. So overall, we view MTN as a company that can actually return sustainable value to investors, given the fact that increasing smartphone penetration in Nigeria as well as increasing subscriber base, we continue to drive the company's revenue upward in the long run, especially for the data business, where we expect to see a CAGR of around 26% over the next 5 years. I believe this sums it up for our outlook for MTN in 2021. Thank you.
Thank you very much, Luke. For time, unfortunately, we will not be having enough time to take our partners at Frontier Africa. And we'll just go straight to the Q&A. I see somebody already has their hand up. They will be please go ahead and ask your question. Sorry, you can unmute yourself and ask your question. Deal with me.
I'm sorry, I think that was an error. Sorry.
It appears that we're having issues hearing Adeomi. So while we try and reconnect, if there are any other questions, kindly raise your hand. We'll try and quickly take the Frontier Africa report in the few minutes that we have. Temple, please go ahead.
Okay, good morning. Taking off from where Joshua finished off on MTN. MTN is actually getting listed in Rwanda. They will be listed on the 4th of May on the Rwandan Stock Exchange. That is basically to help them realize the exit of CTL, which holds a 20% stake in MTN Rwanda. And we know that in Ghana, Moody's actually assigned a new rating, B3, with a negative outlook to Ghana. That's on the basis of the effects of coronavirus and the debt servicing status that they have so far. In Mali, Moody's also assigned a new status, giving them a CAA1 rating. They said that they expect the recovery of that economy to be hinged on the cotton sales, and of course, given the fact that there's been a stable political situation lately since the coup d'etat that they realized or experienced in August 2020. I think one of the germane stories for us today will be in the southern part of Africa, where Coca-Cola, a company, that's the global body of Coca-Cola, now plans an IPO in the next 18 months to be able to see the sale of its portion, the shareholding in Coca-Cola Beverages Africa. That is something that will bring about the listing of Coca-Cola on Amsterdam Stock Exchange, and that's primarily on Amsterdam Stock Exchange and secondarily on the Johannesburg Stock Exchange in South Africa. It's a major IPO that everyone is keeping their eyes on. And of course, finally, will be the northern part of Africa, where Egypt Air has now signed a memorandum of understanding with Sudan Air to strengthen aviation ties. That's basically is to help the partnership realize the Egypt see to the effects of Egyptian expertise being carried out in Sudan by way of training and maintenance operations in the Sudan aviation sector, such that there will be some kind of an exchange of capacity building in that regard. These are our headlines for today, and thank you for the opportunity.
Thank you very much, Temple. Unfortunately, we are out of time. Apologies to anyone who had questions. We could not get to questions today, but if you email us at research@vetiva.com, we will respond as quickly as possible. Thank you very much for joining us in today's meeting. We hope that you will join us again tomorrow. We hope that you enjoy the rest of your day, and thank you once again for joining us. Good morning.